Have you ever wondered if it is too late to invest in Bitcoin? If you have, then you are in the right place. In this video, I break it all down. Firstly, what is Bitcoin? It's digital money, a form of electronic cash, created in 2009 by the mysterious figure, or group of figures, known as Satoshi Nakamoto. The true identity of Satoshi remains one of the great mysteries of the digital age. Unlike traditional currencies like dollars or euros, there's no physical Bitcoin. You can't hold it in your hand or store it in a vault. It exists only online, as lines of code and encrypted data, stored on a vast network of computers around the world. So, what makes it revolutionary? What is it about Bitcoin that has captured the imagination of so many people and disrupted the traditional financial system? The key is that no single person, bank, or government controls it. It's a decentralized system, meaning it's not subject to the whims of any central authority. This idea of decentralized money, free from government control and manipulation, captured imaginations worldwide, sparking a global movement. And its price journey is legendary, a roller coaster ride of epic proportions. Early buyers, those who took a chance on Bitcoin in its early days, saw pennies turn into thousands of dollars, realizing unimaginable returns on their investments. Stories of overnight millionaires fueled by the meteoric rise of Bitcoin fueled massive interest and a sense of FOMO, fear of missing out, among investors. But it's not just about price speculation and the potential for quick riches. People are also genuinely excited by the underlying technology that powers Bitcoin, the blockchain. Bitcoin lets you send value anywhere in the world at any time, without the need for a traditional bank or financial institution. Some call it digital gold, a store of value that can't be easily inflated or manipulated. It's seen by some as a safe haven, a hedge against inflation and economic uncertainty, a place to park your wealth when traditional economies get shaky. Major companies and Wall Street giants are now investing in Bitcoin, signaling a growing acceptance of cryptocurrency as a legitimate asset class. This institutional investment is adding legitimacy to the Bitcoin market, attracting even more attention and capital. And the introduction of Bitcoin ETFs has made it easier than ever for regular people to buy in, opening up the market to a wider range of investors. But with all this attention, excitement, and investment come big questions and legitimate concerns. Is it safe to invest in Bitcoin? Are there inherent risks that investors need to be aware of? Is it too late to get in on the action? Have the biggest gains already been made? Or is it all just a bubble, destined to burst and leave investors with nothing? These are the critical questions you need to answer and the risks you need to understand before making any investment decisions about Bitcoin. So, let's break it all down, examine the pros and cons, and help you make informed decisions about Bitcoin. Before diving deeper into the world of Bitcoin, it's essential to establish a solid foundation. So, let's clear up some key terms that you'll encounter frequently. These terms are the building blocks for understanding how Bitcoin works and its potential impact: volatility. Bitcoin's price can swing wildly. It's known for its unpredictable nature, big gains, big losses, often in a single day. This rapid fluctuation is something every investor should be aware of. Blockchain. Think of it as a public digital ledger, a record book that everyone can view, shared across thousands of computers, making it incredibly resilient. Every Bitcoin transaction is recorded here, permanently and immutably, making it secure and transparent. This transparency is a key feature of blockchain technology. No banks needed, just math and code. It's a system built on cryptographic principles, removing the need for intermediaries. Halving. Every 4 years approximately, the reward for mining new Bitcoins is cut in half. This is a pre-programmed event in Bitcoin's code. This slows new supply, reducing the rate at which new Bitcoins enter circulation, making Bitcoin scarcer over time. This built-in scarcity is a fundamental aspect of Bitcoin's design. Historically, halvings have led to price surges, as the reduced supply can increase demand. Store of value. Like gold and other precious metals, Bitcoin's limited supply, capped at 21 million coins, makes it attractive for protecting wealth against inflation and economic uncertainty. Only 21 million Bitcoins will ever exist, a hard limit coded into its very core. No printing more, unlike traditional fiat currencies. Supporters say this scarcity, this fixed supply, shields against inflation, preserving purchasing power over the long term. Understanding these basics is crucial before you invest a single dollar. The jargon can sound intimidating, and the concepts can seem complex at first glance, but the core ideas are simple, and with a little effort, easily understandable. Now let's see how Bitcoin's price has moved over time and examine its historical performance. Bitcoin's price history is a wild ride. In 2010 it was worth just cents. By 2013 it spiked to $1,000 then crashed. The 2017 run saw it soar to $20,000 then plunge to $3,000. Each cycle a huge surge, a painful crash, then a slow recovery. In 2021 Bitcoin hit nearly $69,000, fueled by big investors and companies. After another crash it rebounded, especially after the 2024 ETF approvals and halving, reaching over $73,000. The pattern? 4-year cycles often tied to halvings, with each peak higher than the last. But brutal crashes, sometimes 80% or more, are part of the story. Bitcoin's history is about big risks and even bigger rewards. So why do people keep betting on it? The main reason? Digital scarcity, only 21 million Bitcoins, ever. In a world of endless money printing, Bitcoin's fixed supply is a powerful hedge against inflation. Adoption is growing fast. ETFs, big companies, and even some countries are getting involved. The technology is robust. Bitcoin's network has never been hacked. Upgrades like the Lightning Network could make it faster and cheaper to use. Bulls see each crash as a reset, not a failure. Historically, new highs always follow. Many believe we're still early in Bitcoin's adoption curve. If demand keeps rising, the price could go much higher, but not everyone is convinced. Critics point to Bitcoin's extreme volatility. Huge price swings make it risky as a store of value. Government regulation is a big threat. A crackdown could tank the price. Real-world use is limited. Few people actually spend Bitcoin. Competing cryptocurrencies could overtake it. Mining uses massive amounts of electricity, raising environmental concerns. Security is personal. Lose your private keys, and your money is gone forever. For skeptics, Bitcoin is more speculation than revolution. The risks are real, and the future is uncertain. So, what should newcomers consider? Bitcoin's rewards are tempting. The potential for significant financial gain is a powerful draw for many. Huge gains, especially for those who got in early and witnessed exponential growth. The stories of early adopters becoming millionaires are certainly captivating. Total control over your money, unlike traditional banking systems where accounts can be frozen or subject to third-party interference, and freedom from banks. This decentralized nature is a core tenet of the cryptocurrency movement, appealing to those who value autonomy. It's outperformed almost every asset over the past decade. Its returns have dwarfed those of stocks, bonds, and even real estate in many cases. If it becomes digital gold, the upside could be massive. Some analysts predict Bitcoin's value could reach hundreds of thousands of dollars per coin. But the risks are just as real. It's crucial to understand the potential downsides before diving in. Price swings can wipe out large portions of your investment, and these fluctuations can be dramatic and unpredictable. Overnight, a single tweet or news event can send the market spiraling. You're responsible for your own security. There's no central authority to turn to if your funds are stolen. Lose your keys, lose your coins. There's no password recovery or customer support in the traditional sense. The technology is still new, and regulations could change fast. Governments around the world are grappling with how to regulate cryptocurrencies, and new laws could significantly impact their value. A better coin could come along and replace Bitcoin. The cryptocurrency landscape is constantly evolving, and new technologies could render Bitcoin obsolete. Only invest what you can afford to lose. Never put yourself in a position where a Bitcoin crash could jeopardize your financial stability. Don't use money you'll need soon, for rent, bills, or other essential expenses, or before you've paid off high-interest debt. Focus on eliminating those burdens before venturing into speculative investments. Bitcoin is a high-risk, high-reward bet. It's not a guaranteed path to riches. Best as a small part of a diversified portfolio. Don't put all your eggs in one basket. Education and caution are your best tools. Do your homework and proceed with careful consideration. So, should you invest? That's a decision only you can make based on your own risk tolerance and financial situation. Is Bitcoin right for you? It depends on your risk tolerance, goals, and financial situation. It's not a get-rich-quick scheme, it's volatile and unpredictable. For some, a small allocation, 1 to 5% of a portfolio, makes sense. Only invest what you're willing to lose. Pay off debt and build an emergency fund first. Don't invest money you'll need soon. Dollar-cost averaging, investing small amounts over time, can help manage volatility. The key is education. Know what you're buying and why. Bitcoin's future is uncertain, but its impact is undeniable. Approach with caution, curiosity, and a long-term mindset. The decision is yours. Just make it an informed one.